Snipers, you have to see what's happening to the cryptocurrency market today as the Bitcoin bears have defended the $58,300 resistance level, and now you can see price action is below the 50-period moving average on the daily chart, the monthly open, and the weekly open, and now we're heading towards this 100-period moving average, which is an extremely crucial level for Bitcoin, and Ethereum hitting our target of 65,000 Satoshis yesterday. You can see we had this major wick that took us all the way to our target of 65,000 Satoshis. And now we're starting to see sideways price action with the Ethereum to US dollar price at that $3,300 level, exactly like we talked about yesterday in our video. We all know the path of least resistance is always going to be sideways to a little bit higher. And that's exactly what we're seeing here with the Ethereum chart, with this drop back down to that 3150 area. And now we have this weekly open sitting at 2970, and then the monthly open sitting right around that 2777 area as a potential long entry for the Ethereum price, because I'm going to talk about what I'm expecting over the next few days, because Turnaround Tuesday has proven to show its effect. And interestingly enough, look at what's happening to the DXY. Exactly like we predicted yesterday, we are in a potential reversal here with the DXY up over 0.33% today, which is a big deal for the DXY. And you can see we are right at this monthly and weekly open, testing it already with this wick above this area. And just like the thesis that if you've been tuned into this channel, I've been talking about over the last 30 days, if the DXY does this type of reversal at this exact moment, we're going to start seeing traditional markets get affected by that. And we all know what happened in March 2020 when the traditional markets fell, and notice how the S&P 500 breaking our major support level after this move for the DXY on Turnaround Tuesday today. And now we have this potential target of the 50-period moving average for the S&P 500, and it would be the last domino piece to fall, because of course, when we look at traditional markets internationally, Japan being the largest has already come below its daily moving averages. You guys are watching the Snipers channel. My name is Naeem Al-Abedi. If you appreciate this content, remember to smash the like button. First, I want to talk about exactly what's happening in Bitcoin, because just like we talked about yesterday, we looked into the micro time frames as we were testing 58,300, which we all know is the Elon Musk pump high. And I talked about the bearish flaggish type of formation that was forming on the 15-minute chart. As soon as we got above 58,300 yesterday, you can see all of this sell pressure came in, and now we're starting to see more sell pressure come in. And yes, we do have buyers, but we do want to address the next key support level, which is going to be this 100-period moving average on the daily chart, because we've yet to break fully below this 100-period moving average for Bitcoin. We did see a test of the 100-period moving average last week, but all of the candles on the daily chart maintained some price action at the 100-period moving average. We didn't see a full body and wick. And for those that understand candlesticks, we want to see a full body and wick below the 100-period moving average if we want to assume bearish pressure for Bitcoin. And so the bears definitely have made their mark, but we all know that the path of least resistance when there's low volume is sideways to a little bit higher. And that's exactly what we're seeing here with Bitcoin. And so the fortunate thing about this is we're still seeing some momentum with altcoins. And we're going to transition and talk a little bit about altcoins later in this video, but I do want to address this 100-period moving average for Bitcoin at 51,600 US dollars right now. And that's going to change over the next few days, but that $51,600 level is a key level. And of course, we know that $49,700 level is also on the table, and the previous weekly open is at 49,000, which is also that big even. And so this is a major support area where we've got confluence with the 100-period moving average, the $49,700 level, and the $49,000 previous weekly open. So we want to monitor price action. If you guys have been tuned into our channel once again over the last 3 weeks, I've talked about any sort of price action between 49,700 and 58,300 for Bitcoin being garden variety market behavior that's most likely going to allow altcoins to see momentum. It's exactly what we're seeing. So we need to address the fact that we're below the weekly and monthly open. That doesn't mean things are bearish. If we want to see bullish upside, we now need to reclaim that 50-period moving average once again. So far, there's not a daily candle that's closed fully below this 50-period moving average, but this was quite a drop. And so the next daily candle that opens in 7 hours is going to be crucial. If it opens completely below this 50-period moving average around that $56,800 level, which is right between the monthly and weekly open, which once again isn't a coincidence. We know what we're looking at here, especially when I've been looking at charts for over a decade. This is an extremely key candle that we're going to open tomorrow. And if it is below that 50-period moving average, that 100-period moving average comes straight into the equation. But really, it's going to also be that $49,700 level. So don't be surprised if we see wicks below like we did when we first tested it a week ago. And then I want to transition into what's happening to Ethereum, of course, the leading altcoin, consolidating and showing some sideways price action around the $3,300 level, exactly like we talked about. And notice how we do have this weekly and monthly open far and away of current price action, and we want to monitor the Ethereum to Bitcoin chart if we want to assume further upside for the Ethereum to US dollar price, or if we even want to predict any sort of downside potential. And at this point, when we look into the more micro time frames, because we did test the 65,000 Satoshi level yesterday exactly as we predicted, and so now we can come into the 4-hour time frame and look at the type of volume that we saw once we got to this major level. A lot of sell pressure on the Ethereum to Bitcoin chart. And here's some food for thought for those that have been watching my channel for quite some time. Sometimes you hear a lot of repetitive lessons. This is something I've never said before on the channel, so this is another little tool that you can throw in your toolbox. But for me personally, when we're looking at the cryptocurrency market, because I've been in this market for so long, when I'm looking at volume, I really trust Bitcoin's volume because it's the largest asset in the market. And when we're looking at altcoins, I always like to look at the altcoin against Bitcoin volume. For some reason, for me, I've trusted that volume more than the Ethereum US dollar chart volume. Of course, we trade the Ethereum US dollar price, but if you understand how to use the Ethereum to Bitcoin chart when trading the Ethereum US dollar price, you're gonna have a lot more success. But even if we look at the Ethereum to US dollar volume, we do have a lot of sell pressure coming in. So we do want to address that there could be potential sideways price action. And now we're going to go into more of the traditional markets and the total cryptocurrency market cap. So for Ethereum, just expect sideways price action and a lot of volatility, but understand this is extremely important. So I'm trying to be the umpire for you guys. I'm just going to read the tape how it is. When we look at the total cryptocurrency market cap chart, we are below the weekly and monthly open right now. We did see a push down that looks like a short-term top here at the $2.259 trillion level, and it was a higher high, which we know those higher highs typically lead to more bearish scenarios. We do have this potential formation here where we have this support level, and at this point on the daily chart, the total cryptocurrency market cap can be considered testing a major support level right now, because the total cryptocurrency market cap chart and the others dominance and Bitcoin dominance chart changes when you look at different time frames, just because of how the data is processed through TradingView. So realize on the daily chart, we could consider this a test right now of this major channel support. If we break that $2 trillion big even, that's when I would have concerns for the overall market, including altcoins, because with others dominance, we're not getting as clear of a picture right now. And so we need to look at the total cryptocurrency market cap chart, because with others dominance, we are starting to kind of show weakness at this ascending support level. And this support level was the start of altcoin season in January 2020. And so this support level is held for months and months and months. At some point or another, I expect it to break, and it could be soon. So we want to monitor this. I'm not saying it's going to happen. So far, the print's bullish. We're above the previous weekly open, but we are below the weekly and monthly open. And so if we break below the previous weekly open at 13.95% dominance, which price action right now is at 13.94, or I'm sorry, it's at 14.06, but it did get down to 13.77 today. If we see more candles closed below 13.95% others dominance, then we might want to start being more cautious with the total market, because that would also maybe take the total cryptocurrency market cap chart below this major channel support and the big even of $2 trillion, and that could have an effect on the total market. So those are just things to watch. And the reason I want you guys to watch these things, and especially this total cryptocurrency market cap chart, which is testing this previous resistance. You can see resistance here on February, resistance in March, resistance in April. Previous resistance always turns into support. You can see it broke resistance. It acted as support. It acted as a resistance again. So we know this is a major level, 2 trillion. It's also a big even. If we break below, we need to watch that for the total cryptocurrency market cap chart, because we all know what happened in March 2020 when traditional markets fell. And I'm going to talk about traditional markets in just a second. Bitcoin dominance here still showing weakness. There is a potential we could be coming down at that 35% dominance level. And here's the icing on the cake. So I'm going to be the umpire. We're looking at the DXY right now. This is an extremely important chart. If you look at the DXY from 2017, it predicted the bottom of the Bitcoin bull market. It also predicted the top here or the bottom of the traditional markets and Bitcoin during the March 2020 crash, when the dollar really started to strengthen in value through the crisis, and then eventually started to wither away back into this bearish trend. And you can see this is the same area of support that we saw a reversal to a bullish macro trend in 2017 between the 89.562 and 91.015 level. And so understand right now for the US dollar, because we are above this 100 period moving average right now, and we do have this potential inverse head and shoulder pattern forming, which we all know we've been monitoring, and this also shows confluence with the 20-week moving average as a support, which we've yet to close any full candles below this 20-week moving average. In yellow, you can see here, this could be a potential area where the dollar starts to increase in value. That brings the value of assets in the US dollar form down naturally, and we're seeing the effects of this already with the S&P 500 today closing this candle now below the previous weekly open at 41.70 when we're looking at the E-mini futures contract for the SPY. And so at this point, it is the last domino piece in traditional market to come down below the 50-day moving average. If we start to see sideways or downward price action, that will affect the cryptocurrency markets, as we all remember in March of 2020. And then to leave you guys with a puzzle piece on the table, we look at gold. You can see we are now above this major support, which was a previous resistance from this channel since we broke the $2,000 level per ounce. And we all know that when we start to see precious metals increase in price, it's typically institutions hedging away from traditional markets into precious metals and commodities. And notice this, and here's a puzzle piece I want you guys to go home with. The gold to Bitcoin chart back into the equation. Let's invert this chart. Notice how we are really fighting this 50-day moving average right now. We still want to monitor this because now it is back below that 50-period moving average. And if we start to see this previous low break here, that could indicate further downside and a trend reversal here, because it's the first time we're seeing gold against Bitcoin since the bull market here come down below this 50-period moving average, and that also was a predictor of the top in 2017. And so I really hope you guys enjoyed this video. Thank you for tuning into the Snipers channel. Subscribe if you've yet to do so. If you want to win one of my favorite books on investing, Principles by Ray Dalio, hardcover version, comment below and share this video. You'll have a chance to win. And with that, I appreciate each and every one of you guys. I couldn't do this without you. And until next time, Snipers out.